What's going on? What's going on? What's going on? Welcome to the CRO podcast. I'm your host, Samuel Paul, and I'm with my boys, Ruben and Cullen. Ruben,
What up, what up, what up?
Let them know where you at, man.
What's good with y'all, man? Hope everybody good, feeling good. I'm out here in Nashville, Tennessee, with 1/3 of the podcast, checking in.
Straight up. Colin Burnham here. Another third of the CRO podcast, all the way from Bowling Green, Kentucky.
Yes,
So,
sir. Yes, sir.
How you living? How you living, bro? How y'all living?
Man, living. Blessed to be here. Everybody, please, if you haven't already, real quick, please get to the Instagram, CRO podcast. Please get to the Instagram, drop a follow. Any questions, comments, anything, interaction, please interact with us. We love it. This is for you guys, right? This is for you guys. We got some good dope today, some good game. Ruben and Cullen, they've been really excited. We've been ready, you know what I'm saying, to get
ready.
They've been up my back trying to make sure that we get this. We got some good dope. Y'all got anything before we get this thing popped off?
Yeah, let's make sure we clean up that cup right quick. So we at the Cup Run It Over podcast are not financial advisors. For financial and tax advice, please consult a professional. The following information does not constitute any personal recommendations. This should be used for educational and entertainment purposes only. Now that we've gotten it out of the way, let's start filling your cup.
Right on. So, really today, in this episode, we kind of wanted to hit on just kind of the intro to investing, finance, kind of just a little background information to get you kind of going in the right direction. So we're going to hit on a little bit of investing, a little bit of budgeting, a little bit of mindset, and hope that we can kind of get some stuff rolling in. Then we got a little Q&A section as well of some questions that we got from you guys that we will answer as well. So like Colin said, you know, entertainment and educational purposes only. Do your due diligence, do your research. Consult a financial advisor if you got one. Talk to a professional. We just here to kind of give you the blueprint, give you the game, and get your mind rolling, get your mind thinking. Y'all got anything else, fellas?
No, I believe we're ready. Let's get it going.
Yeah, let's get it popping.
Bet. All right, let me share my screen. Be sure we good. Y'all see this?
Yes, sir. I can see
We
it.
up.
Yes, sir.
Hey, episode 1, Cup Run It Over. Let's get it. Living more abundantly.
All right, guys, I'm gonna start this thing off. I'm here to talk about fear, right? So, really, these are gonna be a couple of different mindsets for investing, right? So, the first one is gonna be fear, right? The market is a no fear zone. So, what does that mean? You can't come in here scared to lose money, right? You're gonna have losses, you're gonna have wins, but you got to understand that you can't be scared. You can't be scared of the big L because it's going to keep you from the big win, right? Another thing about fear is it makes you kind of gamble, right? So when you're scared of missing out on an opportunity, you'll throw money into an investment that you didn't do your due diligence on, right? When you're scared, Dogecoin, that people and I've made money on Dogecoin, and I'm sure that y'all
AMC.
AMC, GameStop.
They did no research.
No research. But you saw somebody else making money with somebody else's portfolio and their skills, and you said, hey, let me just go ahead, boom. And then guess what happens? The money takes your money, right? The market takes your money, right? So you got to understand that. The only wave you need to ride is your own wave. So stay in your lane, right? That's a point that I wanted to make sure I got on, because it'll have you one way or the other. Too scared to take a risk, taking too big a risk for your portfolio, right? FOMO, that is the fear of missing out. Write that down, please. Please write that down. Write FOMO down, please, because
That's big, and that goes into the whole Dogecoin and AMC's and Teslas and all that.
Did you have something to add to that, Colin?
No, you good. Go ahead.
Perfect. Yeah, exactly. That goes right back into it, right? Wait for the good move, wait for the sniper entry, wait for the play that's meant for your portfolio and that's comfortable within your range, and then just go for it and make your money that way. You know, it's no rush. All right. Another mindset of investing is understanding that it's a marathon, not a race, right? So I want you to write this down. HODL, right? Hold on for dear life. Now, the thing about holding on for dear life is you got to know what you're holding on for dear life for, right? You got to know that it's the long game. You got to know that I'm just not holding this because, oh, I'm just praying that it go up. I'm praying it go up. No, you did your due diligence, or you knew somebody who did their due diligence and you're trusting their word, and you got to make sure that you hold it. You can't be too emotional with your money. The market is a no fear zone. So no fear, that means you cannot be scared to lose it. So if I'm not scared to lose it, that means I'll keep it in there as long as it needs to get there. As long as it's growing.
Can you hit on like what holding means as far as like in the stock market, what holding for the long game means as far as in the market?
I'm 100% Ruben. Yes. So for anybody who might not be familiar with the terminology, holding, right? Holding in stocks. So let's say right now I buy a stock for FedEx. I know FedEx is trading for around $250 right now, right? I buy it right now. I'm 22 years old. I hold it for 10 years in hopes, right, that it increases in value. Now, I'm not holding it just praying to God that it goes in value, right? I did my research on FedEx, right? I know that FedEx is a good company and a stable company who will continue to do well and progress. So I'm banking on my money being made in the asset growing in value.
Yeah. So for you guys that kind of like are still new to the game, like think about it like when you used to get them Pokemon or Yu-Gi-Oh cards or whatever, you know what I'm saying, whatever it was when you was little, that you think this is valuable, let me buy this in hopes that somebody gonna be like, hey, I want this card, and maybe back then we weren't thinking we're gonna sell it, but everybody wanted it, you got it, type deal. Same thing with the stock market. You get them assets, those stocks, companies, while they're somewhat undervalued at a low price, but good quality companies, in hopes of in the future they'll be worth more than what you bought them for. And that's what's going to build equity, build wealth in the long game, the long term.
Right. That's what builds it in the long term. And that's chess, not checkers. So checkers is just, okay, let me get this piece. Boom, now I got that piece. All right, now I got your piece, right? But the thing about chess is if you make the wrong move, not all pieces are the same. So not all stocks are the same. Not all ways of investing are the same. Because even in the stock market, right, you could be holding an option, and options move completely different than a stock does. You holding an option is a lot more risky than you holding on to a stock. You know what I mean? But if you don't understand investing and how the market works and your risk, then you're not going to understand that. But you got to know it's about holding, making sure that you understand what you're investing in, you're confident in that decision, and you hold it, right? Time in the market versus timing in the market. Any person that tells you anything different is preaching wrong advice. Your time in the market versus time in the market, right? So let me actually ask one of you fellas. Colin, what do you think time in the market versus timing in the market means? Like, what does it mean to you?
To me, that means that the more time in the market you spend, the better off that you're going to be. A lot of people, I think now is a great time to use this as an example with AMC. With AMC right now, people are timing the market. So what they're doing is they're really guessing and trying to take what they feel is their best entry without very much knowledge of it, of what's going on with the situation, of how stocks, let's alone AMC stocks specifically, but how they even work, right? So timing the market, what you're doing is now you're gambling, right? You're no longer taking a calculated risk or any type of studying. There's nothing behind it. There's really no support to what you're doing. What you're doing is you're putting your money in a machine and you're spinning the slot. You're guessing, right? But that time in the market, that means you're learning about it. You've studied it. You know what this is going to do. You know how it's going to react to, maybe it's the day of the week. Maybe there's a certain market event. Maybe there's some economic events that are happening. You know exactly how this stock is going to react based on your time in the market and what you've been able to study and put together.
I appreciate you calling. Yeah. Did you have something to add to Ruben?
Nah, man, he hit that nail on the head. Hit that nail on the head, man.
Nah, I agree. And that ties into holding in general, right? Trading versus investing. So yes, you can trade in the stock market and you can also invest in the stock market. The difference is trading is short term, right? So if I'm a trader, you've heard the term probably day trader, right? Or intraday trader. So those are people that, okay, I'm placing a trade in the morning or maybe the day before, and I'm hoping to get my money in like within the week, maybe a day, maybe 2 days, maybe a couple of days, right? But when you're investing, right, I'm not looking for my return right now. I'm not looking for my money back right now. I'm building a foundation, right? I'm building assets instead. It's the long game, right? Scared money does not make money, right? But you got to understand risk management, right? So it's not like, oh, scared money don't make no money, and then you just throw $500 that your grandma just gave you into AMC when your homeboy told you $5 It's like,
Old bag on.
yeah, and you're just like, oh shoot, bet I got you. Then what happens? Pull back. Then what do you do? Because you don't understand the market. You sell because you're too emotionally tied to your money. You were scared to lose it in the first place. That's why as soon as it went back down, you sold. You know what I mean? But to avoid that, you should have good risk management. So you're extra not attached to the money. So don't invest money that you're not scared to lose. But on top of that, the money that you do decide to invest, you have to be detached from it as well, because there's always the opportunity it might go down. So understand that your risk management is important, and that's going to keep you from making that dumb mistake. It's going to keep you from gambling. Yes, gambling, I said, because when you're doing that, oh shoot, scare money don't make no money, you're gambling. That's all it is. And I wanted to harp on why, right? So the competition that you're going to receive in the market, these are the big banks, the institutions, the people who have so much, the people who can make the AMC move like that. Let me be honest with you.
Mm-hmm.
People think like it's like, oh, I'm just gonna put my money in this, and then this is gonna go up in Kroger, and didn't do no research on Kroger, don't know where the institutional traders are at, don't know where the money's being pumped, don't know what sectors are down, don't know what's going on in the market, and nothing, right? So you got to understand that, because if you don't, that's where you're gonna get that's where that money that your grandma just gave you, that's how it gets gone, because you didn't understand your competition, right? So
Yep.
don't be scared, and go ahead and say what you're about to say.
No, I was just agreeing with you, man. Like, I feel like a lot of people, they don't realize when you start investing in the stock market or the forex market or whatever, futures market, whatever it may be, you're competing against these guys, these hedge funds, these people that are experiencing the market, that are working with millions, billions, trillions of dollars, and they can make stuff happen. They can make prices move and jump.
Than any of us have.
Yeah. So you have to know that and understand that yeah, I want to buy Facebook, but if the powers that be, they dumping it, and you getting in the wrong time.
Facts, getting in at the wrong time, because it's so deep, like it's so deep to where it's like you could know where the move's going, but what Colin was saying about trying to time the market versus time in the market, when you're trying to time the market, you're trying to beat out the people who literally created the market.
Exactly.
You know what I'm
you you want to be on their team and getting in when they getting in and getting out when they getting out. And of course, you never really are gonna know, but there's certain things that you can see, certain things that you can look at, due diligence. And we'll talk about these things in future episodes about how to read charts and reading fundamentals, reading technicals, and all that type of stuff. You can make a high educated guess as to when things are going to happen and not maybe have a significant drop. May have a little bit, but you're not going to be out the whole bag.
Yeah, exactly. Agreed. Yeah. And last but not least, now this is probably the most important because it's gonna tie everything in together, right? Investing with a clear mind and purpose. So hustling backwards. So when you're not when you're fearful, you're hustling backwards. When you don't know you're in it for the long game, you're hustling backwards, right? When you're gambling, you're hustling backwards, right? Why? Because instead of making advancements, instead of making growth, you're going backwards, right? And now, why do people sometimes end up hustling backwards? Because honestly, it starts off with the third one on this list, knowing your why. It should have been number one. Um, that's investing with a clear mind and purpose. So if you're somebody who just wants, let's say your goal of investing is I just want a house paid off that my kids could live in, right? Okay, well then you need to fit your portfolio. You need to even fit your budget and etc., which the fellas are going to talk about a little bit more when they get on, to fit that. So you need to fit your portfolio around that goal, around that purpose, around that why. If it's to, maybe you want 100K liquid for your kids when you're gone, or you want 50K in stocks and bonds and ETFs by the time they're in college, or whatever it is. You got to know, because that's gonna dictate how much money you play with, how much money you're willing to risk, how much money that you want to make, and what vehicle within investing you like to take, right? And never feeling your way to a trade, right? So if you don't have a clear mind, you're gonna be like, oh well, I done heard this so many, I done did this so many times. Oh, I just feel like it's gonna go up. I just feel it's gonna go up. You know what I'm saying? Like, and then next thing you know, you feel like you need to get another position. And then no, look, you feel like you need to get another position, and now
you don't feel like you need another job.
Exactly.
Because now you don't now your feelings then turned over into your logic, and now you don't understand why you're investing anymore. You're back to trying to get it all ties in together, making sure that you have the right mindset, and making sure that you're not fearful. So don't play with money that you're scared to lose, and don't be scared to play with money that you do play with. So don't be fearful. Please do not write these 4 things down. Do not be fearful. Know that you're in this for the long haul. Know that if you're scared, you won't make money. And know your why, because that's going to be the way that you'll be able to execute in the market and anything in life. And I appreciate y'all let me have the floor real quick, and I'm gonna pass it off to my man Ruben and let him spit some game to y'all real quick.
Yeah, man, that was big. That was big, Sam. I feel like a lot of people, they just think, especially with social media now, like they think investing and trading and all this stuff is just easy and I can just save up a couple of G's or a couple $100 and get going and start making money. Hypothetically, yeah, you can, but people don't realize there's a mindset, there's emotions you got to deal with that you have to learn how to not use and not think about once you jump into this game. And that's a big thing, like you said, knowing your why. I feel like that is what a lot of people lack and what ends up hurting them in the short term when they start pouring money into markets and investments, because their why is off. They thinking, oh yeah, I'm gonna throw this $100 in and come back with a G and I'm going about my way. Like, that stuff's not gonna happen until you got experience, you done learn, you done took a couple L's, and it may be 2 years later before you be able to flip $100 to $1,000. So
Exactly. Exactly.
so
Facts.
so it's like, you know, that's big. And jumping off of that, going into budgeting, it's another one that's big, because people that don't budget, they need money and they think, let me just throw my last $100 into this AMC trade or whatever, or this little investment they say is gonna turn back 10% and I'm gonna be sharing the bills. Like, nah, that's not what you need to be doing, fam. So
Bro,
without go ahead, yeah.
No, it's just like, real quick, it's just the mentality of like, I want a lot for a little, like, and people got to realize, like, you can't, like, in life, you gotta
Get
give
fast.
Yeah.
Yep.
Fast, like, it's you gotta give a lot, and you gotta do it consistently. You know what I'm saying?
Ding ding, consistency right there. Boom. But yeah, so going into that, so budgeting, first thing, so there's 4 things I'm gonna talk about. So 1, knowing what's coming in and what's going out. Like, make sure you write this stuff down or you bookmark it in the podcast. You come back to it later. So number 1, knowing what's coming in and what's coming out. So how much are you spending? How much are you making? That's number 1. Number 2, from that, are you in a surplus or are you in a deficit? So at the end of the month, you got money left over, or you out $100, or you taking a loan for $200 because you're trying to cover this last bill, or you right at even. You spend as much as you make. So just knowing those numbers and being able to track those numbers. 3, from those 2 steps, knowing what actionable steps do I need to take to make sure that my finances are in order, or what steps I need to take to start making my money work for me, because my budget is good. You know what I'm saying? I got a surplus, or I'm doing these things already. What can I do now to make my money work for me and not have to, you know what I'm saying, stay in that hamster wheel, stay in that cycle, make money, spend money, make money, spend money, and you're not leaving nothing for your kids, etc. Or creating that time freedom, which is what everybody wants. People think, I want to make $1 million. No, you don't want $1 million. You want what comes with the $1 million. Doing what you want to do when you want to do it, travel, eating where you want to eat at, staying where you want to stay at. That's what you want. You don't want the $1 million. You want what comes with it. So last thing, number 4, we'll talk about the Richest Man in Babylon budget. So it's the budget from the Richest Man in Babylon. It's a book. I highly suggest you read it, get the audio book. I got the audio book, listen to it 5 to 10 times repeatedly. It's a good book that has a lot of good principles in there that I use. People always ask me, like, how I start a budget. I'll be like, go read that, because it's just got so much game in there, and it's really relatable as well. It's a classic book. So going into the first bullet point of knowing what's coming in and going out, this is your economy essentially. So how you can start doing this is getting your bank statements. So if you got Bank of America, so other bank, what y'all got?
I got Chase and Wells Fargo.
Okay, yeah. What you got, Colin?
U.S. Bank.
U.S. Bank, so USAA, any of those banks, they should have your bank statement somewhere, whether it's online or you get them in the mail. So getting those bank statements, reviewing them, seeing what you spending money on, seeing how much you're making, just being able to see it. You know what I'm saying? Because you can say, oh yeah, I spent $10 yesterday, but it's not on paper. You don't remember it. You just swiped the card and went on about your way. But having those statements, it gives you something. Now I got, you know what I'm saying? I got evidence. I got paper trail. Second thing from those bank statements is importing those numbers and those figures, those categories into an Excel sheet, some kind of document that you can sort and organize and sum numbers. This is big when you want to categorize things. Let's say, and a lot of banks do already have your statements like categorized by like say you went to Starbucks or McDonald's, it'll have that in the restaurant food category already. So like
sector, sector categorized, yeah.
Yeah, but I say depending on what bank you got, it might already be organized for you. If you go online to your bank and go find your statements, like a lot of this stuff might already be done for you. You just got to go tap in. Like I got Bank of America. I know it does it for me. I can go in there and look at my categories in a wheel and see like, oh, I spent this much in housing, this much in whatever, yada yada. But if not, and even if you do got it, this is still a good exercise to do because now you putting in the work, you putting in the time to actually go in and see what you're doing, and it might categorize something wrong that should have been in the category, so you can make sure you clean up the little, be like, oh, this was something I had to send $10 to my friend, or you know what I'm saying. You kind of know what that transaction was for, so it kind of helps you kind of iron out those kind of mishaps as well. Like I said, 3, so categorizing those ins and outs. So I got paid Friday. Oh, this was from job number 1. Oh, I got a demo from such and such. Oh, I cut their grass. You know what I'm saying? Like knowing where your money's coming from, knowing where your money's going to.
Rue,
Go ahead.
I've seen a million times like on TV shows or just regular old people where they'll be like, oh honey, like where was this expense from? Or like did you send your grandmama $200? Or like did you spend $500 at Target or something like that? Like something wild. And they'd be like, like I don't remember. Like and that's literally what you're saying because they didn't have it written.
Yep.
And they didn't have
it written down, or just didn't go and review it. Because you got to think about if I review my base things every month, I'm gonna have a fresher memory like what that was instead of 2-3 months from now. Dang, what was that little $30? Because sometimes they categorize stuff with weird names, and you're like, what is that? $36 look familiar, but the name, like for example,
gas stations are a good one.
Yeah, gas stations. You might see Kroger, but not realize it was the Kroger fuel. You're like, what did I go to Kroger for? And you like, I don't know what that was for because I didn't go to Kroger, but it was the Kroger gas station. So if you do it on a 2-week cycle, monthly cycle, you got a fresher memory of like what that was. You remember. And then as you get going into your budget, you'll know like, I got this much to spend on this. I got this much to spend on gas. So you'll be like, oh, this goes in that bucket. I know, oh yeah, that was gas because that wasn't groceries. You'll start to be familiar with your habits. So then you're not guessing or you're not like wondering what that was for. So for me, like I can see a transaction in my bank statements and I know exactly what it was for. And it's funny because my wife hates me for that because I'd be like, hey, what? Amazon, like what you get? You know what I'm saying? I'm on it. You know what I'm saying? So after a while, like it's second nature. You ain't really thinking about it, and it kind of runs itself. So that's big. And then from there, just identification of your cash flow. So like I said, are you surplus or are you losing money? Are you right at even? Just knowing that cash flow that you got established in your economy. So going into cash flow, talk about these 4 things: so spending review, income review, knowing what your needs versus wants are, and then assets versus liabilities. So once you get into those statements and you get into categorizing your transactions, go and look and see what you're spending money on, because I say 8 times out of 10, over half of that stuff you probably don't even need. So just being able to be like, all right, This was food, this was grocery, I need that. This was rent, or this was a mortgage. This was gas, I need that. Or, oh, this was gas when I went to Miami. Like, I really didn't need to go to Miami. You know what I'm saying? Just being able to, like, all right, like, what did I spend money on that I needed? What did I spend on that I could do without? Or, you know what I'm saying? Like, dang, I'm spending everything on me. I'm good. Like, I'm not really spending extra money on BS. You know what I'm saying? I'm kind of in line with my spending. So it's good to kind of go through that and say, all right, like, this was for this. Did I need that? Did I not need that? Getting into income review, same type of thing. You know, I know I'm bringing this much in from my job, or I'm bringing this much in consistently from a little side hustle, or from, you know, cutting grass or whatever it may be, and just being familiar with that. I'm sure most people know how much they make from their job or what's coming in, because that's the first thing you waiting on Friday morning. Like, where is that $13.50 from job description? You know what I'm saying? You waiting on it. So a lot of people already know this. But if not, you know, something wrong with you if you ain't looking at that notification on Friday morning, every 2 weeks or every week, however you get paid. So just going through that. Like I said before, once you get through these, just knowing your needs versus your wants. So obviously, housing, food, transportation, gas, insurance for car. If you got a car note, we'll talk more about that in later episodes, about car notes and all that type of stuff. And just classifying those things between needs and wants. If you're in especially if you're in a deficit, like, all right, like, what can I cut out? What can I do without? And sometimes you're gonna take sacrifices. Like, you know what? I don't need cable, or I don't need internet this month. Let me cut it out. I know it's different now because a lot of people at home. You might need internet for your job, but let's say in a regular world, you know, you going to work, like, you at home, like, read a book, like, cut the internet off. That's maybe 60 to 80 bucks you can take out the budget, and you can sacrifice for 3-4 months while you get right. Or taking out, you know, I'm not gonna eat out this month. I'm gonna just go to the grocery store, make stuff. You know what I'm saying? I'm not gonna overindulge and buying drinks. I remember back in the day, for a weekend out, man, I was spending 40 to 150 bucks on just drinks and snacks and stuff. Like, you know what I'm saying? Just wasting money. So just being able to go and categorize that type of stuff. And then from there, understanding what assets and liabilities are. So this is big once you start understanding, you know, what's coming in, what's going out, and then what do I need to be spending my money on, and what's going to help me bring more money to my bank account. So, like I said before, you know, the car note, the liability. As soon as you got a car off the lot, it's depreciating, and you paying that note every month. But the value of the car is going down. You bought the car for 36. By the time you done paying the note, it's a 20, 15 grand dollar car, probably less than that. So just understanding what assets and liabilities are, and I got a surplus. Let me not take my surplus and go buy a bunch of liabilities, or put that money towards liability payments. Let me go buy some assets. That's when we start talking about assets, like stocks, real estate, a business. You know what I'm saying? Anything that's going to help you bring
oil,
more money back
in. A commodity.
Yeah, exactly. But yeah, y'all got anything to hit on that? Oh, that was a lot just for
the spending review. I done a spending review, and I recognized how much I was eating out, and I didn't have to be. You know, I say, you know, they say food is a need, right?
Yeah.
It wasn't necessary for me to eat out. I wanted to eat out, right? It's crazy because, like, I'll go grocery shopping, and on the way to the crib, I stop and pick up some food. It's like,
and you say, "Oh, I need to eat."
I'm like, bro, why? Like, bro, why? You just bought food.
It makes no sense.
Go home.
Just bought food.
Cook your groceries. Use your groceries, man. You didn't need that food. You wanted to eat out. You know, it's just really having that discipline to make sure that you're allocating money to the correct places. Telling yourself no sometimes.
And really, it's a lot of people. It's gonna be a lifestyle change, and you got to be able to take that sacrifice and be real with yourself. Check yourself, like, especially if you're trying to do something and really change your outlook and your trajectory, like you're gonna have to take some sacrifices and really like check yourself and be like, I don't need this. It's gonna be hard, but think about it like this: the person you are today is making decisions for the person you're gonna be 5, 10, 15, 20 years from now. So you don't want to be that person 15 years from now looking back at the person today and be like, dang, why did he not do that? Or I'm glad you did that. So it's like, it's your pick, you know what I'm saying? So like I said, we ain't no financial advisors, you know what I'm saying? But it's just simple things that you can start doing now that's gonna help you later on. So getting into number 3, action steps. So like I said, once you get those reviews going, everything, categorized, you start seeing what's coming in, what's going out, you know what I'm saying? Cutting the fat, unnecessary items. We already talked about them. Maybe it's cable, maybe it's a extra cell phone bill you got, or could be anything that's just unnecessary. Going out to eat, going to parties and spending money on drinks, whatever it may be, it's unnecessary. Like, yeah, it might be fun, it may be cool, but you don't need it. And then once you kind of get that situated, if you got debts, it's a big thing. A lot of people got debts. So starting to pay off those debts from smallest to biggest, if you got them, or you don't have any debts, you got surplus of money, you start investing. You start putting that money towards a stock account or a Roth IRA, or extra money to your 401k for your job. Starting to put that money to work. Really, people think investing is like, I'm gonna go make some money and pull it out next week, but people don't think about retirement. They don't think about their kids. They don't think about, if I have 3 kids and I'm gonna go to college and 2 of them don't get a scholarship, who paying for that? You. You know what I'm saying? Or you're gonna make your kids take out a loan and you just passing down the same cycle, you know what I'm saying? So it's like people talk about breaking generational curses. Like,
generational curse.
It's gotta start with somebody. So why not it start with you if it hasn't started yet? Like, don't be selfish, you know what I'm saying? Yeah, you want to live life and have fun and do all those things, but at the same time, you're gonna look back and be like, man, I wish I would have did that instead. It's gonna mean more to you than a night on the town or going wherever. And then from there, staying in tune with your finances and reviewing weekly, bi-weekly, daily if you got to, and really just getting in tune with what you got coming in, what you got going out. All right, I paid this much off on the credit card, or all right, boom, I'm going 3 months without going out to eat. Just staying in tune with what you're doing, because a lot of people, they just swipe, or they pull out a 20. Oh yeah, I got you. Yeah, come on. Like, you got to be in tune, or you'll easily start throwing money in places that you'll go back and look like, dang, I did that. Like, I spent 40 at, dang, you know what I'm saying? So just staying in tune with that, and then staying away from those traps. I be just on my mind, but brand new cars, credit cards, even sometimes you're not responsible. Staying away from those traps, and then finding the assets and putting your money towards those that's gonna bring you back more soldiers. So those are some action steps you can take once you start knocking out those first 2 steps. And then the last thing I got for you guys is the Richest Man in Babylon budget, which is actually from the book. So I'm gonna cut out a little chapter for you, but still want you to read it, because I'll tell you, it's game changing. So a philosophy they kind of have in there is 100% of your income is allocated into these 3 different buckets. So your first bucket is your needs, and this bucket is 70% of your income. So it's going to your bills, food, groceries, mortgage, stuff that you actually need. So stuff that's going to get you through just life, basic life needs and necessities. Not talking about, I'm trying to go to Florida for a week or go to California. I'm trying to go to this concert. Nah, this is just straight, bill stuff you got to take care of to provide for your family or whoever you got with you, taking care of those things. So that's the first bucket, 70%. So Next bucket, 20% is going to investments or paying off debt if you have it. So taking that 20%, if you got debts, and every month you're paying off that smallest debt to the biggest. So if you got a credit card that's 50, another credit card that's 100, another credit card that's 1,000, you paying off that $50 credit card first, because once you start rolling, you like, dang, I paid that off. I feel good. Let me keep going. So doing that, it's called the snowball. You ain't heard of that. Paying off that debt and staying consistent with it at 20%. Then once you get that, or you don't have any debt, you start doing your research, but start saving that 20%. Start putting it aside somewhere, whether it's a savings account or, just putting it somewhere separate, so like this is gonna go towards an investment. After I'm done researching what I need to research, or you done the research already, all right, let's start pouring it into those investments and roll with it. Then the last bucket is your savings. So 10%, that's always a magic number, 10% for savings. So you're taking 10%, put it into your savings account, and you want to build a solid 3 to 6 month emergency savings. So people always say emergencies always happen when you don't have the money. So it's like you want to prepare for those times. Like, for example, I had to get 2 tires placed on the whip, but I had my emergency savings saved up. So of course I didn't want to spend the money, but I got it. You know what I'm saying? I don't have to go get a credit card and get in more debt, and you know what I'm saying, I have to pay that off. But I took the time to say that 10% from my income, built it up. Now if something happens, boom, I just pull that out, boom, take care of it, and it's you keep rolling. And it takes a lot of stress, a lot of mental anxiety about, man, what do I do if this happens? What do I do if this happens? It's taken care of. So those are the 3 buckets. Like I said, read that book. It's definitely some good knowledge. And with that, I'll pass it off to Colin.
Yeah, I'm definitely going to add that one to my list of books to read. And we can touch on that too. We definitely got a lot of good books. I also have a link to some free books that are online. So again, get in touch with the CRO podcast on Instagram, and I'll be more than happy to share that link with anybody who requested. But I'm not just gonna send it out there. I want y'all to request it, see y'all actually paying attention, and have the desire, to actually read those books. So definitely get in touch with us on that. I'm gonna go over a few investing basics here. Don't expect anything that you get ready to learn here to make you money on tomorrow. Again, that's not how it works. We want you to spend time in the market. We're not trying to teach you to time the market. The first thing I'm going to go over is why you're investing. The second point I'm going to touch on is staying in your lane. You all have no idea how important this is going to be throughout your trading journey, throughout your trading and investing, through all of this journey. The third point is going to be minimizing your risk. We're not here to gamble. We want you to take a very well decided investment. We want you to know what you're doing before you get into it. And the fourth point that I'm going to touch on is diversifying your portfolio. So touching more on this why you're investing that Sam spoke on earlier. I really want you all to think about what motivates you to make more money. Why do you want to do it? Why is it that you're working hard every day? Why do you clock in at a job that is giving you a check every other Friday, but at the same time they can replace you tomorrow? If you all don't believe it, if you die today, you wait a couple more days, your job is going to be posted. That job is going on. Somebody's taking it, right?
No matter how much they love you, they go to your funeral. They'll go to your funeral too. Like, it's no disrespect or nothing like that. It's just
exactly like that's the world. That's the world that we live in, right? And so it's like, why are you still showing up to work every day? It's not to do your job. It's what that money every other Friday is going to be able to do for you. Might be paying your bills, buying food, some type of luxury brand, whatever it may be, right? So whenever you begin this investing journey, think about those same things and let that be your motivator. Let that be what drives you, right? And the reason that is so important and why I want people to focus on that so much is because there's going to be rainy days in the market. The market is not always green. It's not always going up. If you don't believe it, I promise you, put your money in there. It might hit zero one day. You might not know what to do, but I promise those days are going to come, right? That's not what you see on Instagram. That's not what you see on Twitter, all the social media. People aren't really showing you their losses, right? That's not fancy. That's not flashy enough. But I'm telling you now that it's gonna happen. So you have to focus on why you're investing, and let that continue to drive you. So you're not making those emotional decisions. You're able to have control over yourself, and making better decisions. Really, this also helps the way that you prepare to invest, right? So if you're only in it for a little bit of spending money, then the timing that you put into it, you're only going to put a little bit of time into it. Now, if you want this investing to pay off your house, to pay off your mortgage, to pay off student loan debt, if you want this to be your main bread basket, right, you're going to put more time into it. So why you're investing is also going to help you decide whether you want to be a short-term investor or a long-term investor, right? So a short-term investment could be at the longest. Investopedia says 5 years. I wouldn't think a short-term investment is even that long, but they recommend a short-term investment could extend up into 5 years. But really, these are things that you're looking at liquidating. So liquidating, when we say liquidating, we mean turning that into actual cash. So if you're buying a stock, you own that stock, but you don't necessarily have that money to spend. Not until you sell it, then that stock, uh, now you have liquidated it and turned that into actual cash in which you are able to spend. Same thing if you're in real estate. When you buy a property, everything that home or whatever type of property is worth is tied up into that, right? And typically in real estate, it can be a short-term investment, but a lot of times it's a much longer-term investment. But the time in which you take to liquidate it, to turn those investments into cash, goes back to that. Why are you investing? Are you looking for a quick flip? Are you looking to just trade, make that short-term money, or are you looking to be long-term investments and holding it for however many years? If it's the next 20 years, there's a lot more volatility with that, but there's also the potential for higher growth whenever you're holding it for a longer time. But I want to go back and touch on another point, the point number two of staying in your lane, right? So again, this is the age of social media. Everybody's on it. I don't care if you're 8 years old, if you're 80 years old. It seems like everybody's on social media these days. But what do we see on social media? Again, it's all this flashy stuff, right? We see such and such made
All the good
a
stuff.
$100,000. Now they're driving a Porsche. They got a Bentley. Like, oh my goodness! Like, is this what investing is? Like, let me do this today, and make that money tomorrow. That's not how it is. You know, if anybody watches Wild 'N Out, E-Man Hudson, he's got that catchphrase: "Stay in your lane." You have to stay in your lane, right? These people that we see, that they've spent so many years investing, that we skipped the part in where their growth was, right? We missed the part in which they
Mhm.
were losing a ton of money. So you can't expect to trade and immediately see the results that are posted on social media. It's just not going to happen. So with that, you have to establish a plan and do what works best for you. All right. Each individual trader, they have something that works for them, and they apply that. They have what's called a trading plan. And we'll break down what a trading plan is, more depending on what you're investing in, as we have later episodes. But with this trading plan, you always want this trading plan with you, right? This trading or this investing plan, you always want that with you, and you want to make sure that you're sticking to that each and every time, right? Uh, there's many different factors and many different methods that are going to allow you all to become successful investors, but you have to make sure that you stick to that and you stay in your lane. You got to spend that time in the market to understand what's going on, right? And doing that is going to help you minimize your risk. All right, so that's the third point: minimizing your risk. So first things first, The market is not your friend, and you have to learn to educate yourself, right? That's what we're here for.
Facts.
That's what we're here for, right? You got to educate yourself. If you're not studying the markets, if you're not spending time in it, it's going to take your money and laugh at you for playing with your bread. Don't do it.
Every time.
Do not do
Then
it.
they'll
Every
swear,
time.
oh, this stuff doesn't work. Trading is a lie. You can't make money.
Mm-hmm.
Or everybody's lying. These dudes are even trying to get on the waiver just talking about BS. No, because you just didn't you just didn't do it
Yeah.
correctly.
I about to say out of us three, probably didn't shoot. And man, I don't know how much we done probably lost, but it
Look,
happens.
man, when I first the first trading I done, I put in $5 into the foreign exchange market, right? Okay, a little change, nothing crazy, just trying it out. Lost my $5. I was hurt, right? It wasn't even a lot of money to me, but it was my real money at that time. It's like, oh man, this is what it's like. That can happen on a much larger scale, and it does, where people
Hmm.
have not educated themselves, where they haven't spent the time in the market to study it, and they just don't understand it. It's not to gamble with. It's not to be played with. So number one, educate yourself, and two, spend time in the market. You gotta spend that time in the market, right? A point that Ruben touched on that I'm going to say to help minimize your risk is make sure that you establish an emergency fund. Don't don't get into, especially the stock markets, foreign exchange markets, uh, without having an emergency fund established. You gotta
Yeah,
have that money. You don't want to
that's
go.
all.
I don't recommend going in and putting all of your money into the stock market and hoping like hell that something comes out of it. I don't recommend it.
Yeah, bro. Like I seen a lot of people do that. Like, I'm down on my last. Let me go invest it. Like, no, I need to focus on how can I get more money in, how can I make more money, and then create a blanket, a pillow that I can fall on if something happens, and then once I got that established, now I can invest.
See, bro, that's not even investing. Like you saying, oh, like I'm
Mm-hmm.
down to my last. Let me throw this in there. That's gambling. You know what I'm saying? Like you're literally gambling, bro. Yeah, like you throwing dice. Like that's what you're doing when you just like, oh, I got, I you. This what usually happens. People don't spend the money that they were supposed to do because their budget was bad. Now you're
Yep.
looking for a quick fix. You're looking for a way to get out the way of the buku that you just got yourself in. Now
Mm-hmm.
you think investing or trading or the market's gonna be your way out. So okay,
Yeah.
let me just go ahead and throw this last 100, throw this last 200, and
Yeah. And
poof,
what you say, Sam? Hustling backwards.
hustling, hustling backwards, man.
Exactly. Yeah. So that's a third one. Make sure you got that established. And my last point to help minimize your risk is have an exit strategy, right? So I saw this example. It said when you want to go on a vacation, you're not going to immediately answer that question. If I say, Ruben, where you want to go on vacation? Ruben's gonna ask me what question? What question are you gonna ask me, Ruben?
When, how much,
Exactly.
uh,
When,
who's driving?
how much, where? You know, we want the destination, right? We want to figure out the end point to it. You have to have an exit strategy whenever you're investing, right? So again, that goes back to, are you a short-term investor? Are you a long-term investor? What are you looking to get out of it? As long as you have an exit strategy, then that will, one, is going to give you a peace of mind. Two, that will allow you to not to not lose a bunch of money, and it's gonna keep you goal oriented, right? And making sure that you don't lose everything, because a lot of times it only takes one win to take you to the next level financially. It really only takes one. And an exit strategy that can work for profits and losses, right? So if it's on the downside, an exit strategy can take you out at the correct time. Or if it's to the upside, you say, okay, well, I'm at 30% profits now. I'm ready to get out of this investment, this trade, whatever, and now you can get out of it. On the next slide, it shows you a quick example of an exit strategy. So this is a quick excerpt from one of Robert Kiyosaki's books, Retire Young, Retire Rich. So here in this passage, the trader discussed here knew that he would only risk $1,000 every trade or transaction. So with time, you will figure out what works best for you, and you'll be able to maximize your profits using whatever exit strategy you come up with. So again, I emphasize wholeheartedly that you have to stay in your lane and be patient. You know, being a successful investor is a long-term journey, and it's not going to happen overnight. You got to figure out what works best for you. Go ahead and go to the next slide for me. So diversify your portfolio. You have to diversify. So what this means is not putting all of your eggs in one basket, right? We hear this all the time, but they kind of leave it at that point. Don't put all your eggs in one basket. Why do they say that? If you put all your eggs in one basket and you drop that basket, all of your eggs are gone, right? So as an investor, it's important to diversify your portfolio. Not having all of your money in stocks, not having all of your money in real estate, and also not only investing in your job. Even though you have a job, right? You are investing your time into that, and you're expecting, because we're not, our paychecks are not guaranteed. I have a regular job. Every 2 weeks, my paycheck is not guaranteed. I go in there, I work, and I hope that they pay me, right? So I'm investing my time in the hopes that they're going to pay me like they said they would on the coming Friday or whatever that Friday is. So you have to have your money in different places where it's able to work for you for that reason. Uh, in the stock market, there are very many different sectors. There's information technology, healthcare, communication services, yada yada, biotechnology. So many different areas that you're able to invest in. So that's one way within just one market that you're able to diversify your portfolio. Uh, so you have to make sure that you're putting money in different areas. In real estate, this may be leasing buildings to different businesses, or it could mean that you're owning multifamily units, or maybe you are renting out homes to people. There are many different routes that you can do with that, and it can also include having a business of your own. At the end of the day, the goal is to have many streams of revenue, right? They say the average millionaire has about 7 streams on average. That was the last time I looked at. I could have updated it. Maybe more or less now, but they said that the average millionaire has at least 7 streams of revenue. 7 jobs is not going to make you is not going to make you a millionaire. There's no way that you can work 7 jobs, right? You're not going to go clock in at this job and work here and then go to the next one. There's not enough time in the week. You're not going to be able to work 7 jobs and be a millionaire, right? So we have to learn how to put our money in different places and allow the men on on those bills to work for us.
Facts, Colin. I agree. I definitely agree. And it's tough because a lot of people think that we could, like, we've been conditioned to be like, okay, like, I need some more money. I need some more money. Let me go find a better job. Let me go work another job. Let me go, Let me go. Let me go do this. But it's like what you really need to do is get your budget right, learn a
Mm-hmm.
skill like you said, and start investing. Because if you don't, you're always going to be looking for a better job. Job. Now,
That lifestyle creep.
the lifestyle creep,
Mhm.
and the job's never going to pay you what you feel like. You know, because I have a job as well, and you know, a lot of people that I work with, and people in general, they say, "Oh, I'm underpaid, undervalued." Well, that's going to be it for always. always, because the job is not meant to pay you your value. That's how it gets its profit. That's why you need to diversify your portfolio and make sure that you have different streams of income, so you stay afloat in that time. Now, I did get a question, and I wanted to make sure that I hit on it.
Yeah, we're gonna get into our Q&A section. Yeah, if you get these questions knocked out.
We'll say we do two or three questions that we've gotten.
That's perfect.
And really, man, we answered a lot of these questions. So I'm, for sake of time, we can elaborate on this one question that this individual had. We can all hit on it with our own perspective of it. That sounds good to y'all.
Yeah, that's cool.
Yeah, no, most definitely. Yeah, most definitely. So the question I got was, I work full time. When can I invest or trade? Right? You have to make time, right? So you need to do your due diligence, right? You need to be able to figure out the exit strategy, right? So that means that it's really up to you. If you work full time, let's say you work 8 to 5. Well, market opens at 9:30, pre-market's at 9. You can see what's moving. You can download CNBC or a couple of other stock news apps, and you can see what the market's doing pre-market, when the market's moving, see what stocks made some big moves during the day and why they did as well. The night before you go to bed, maybe 10 o'clock, you can just see where price, closed at the previous day or what it's been doing. So there's really no specific time where you can learn about it. Like, it's really just you learning about it and making sure that you actually take the time to learn about it, and not just, oh, AMC's supposed to be going up tomorrow, all right, let me go buy it tomorrow. And then now you don't know when to get out. You don't know if the move is actually right, and you're just gambling at that point. Just gambling.
Mm-hmm. And I would say too on that, what you were saying, Sam, like people always asking that too, like, man, when can I work full time? I'm doing this, that, and the third. Like, when am I gonna learn about this? When can I sit down and actually put money into an account, invest, and do these things? But you gotta think about the stuff you do make time for. Scrolling on Twitter, scrolling on Instagram, watching another episode on Netflix, watching the Hawks 76ers game, or you know what I'm saying? You making time for all this other stuff. But you could be, reading an article or on YouTube, university, that's what I call it. Getting that knowledge, getting that information, listening to podcasts, what we're doing now, talking to people, asking questions. You got time. It's 24 hours in a day. People are already doing it. So you say you ain't got time, or nah, you got time. You just not allocating your time in the right categories to learn the skill or to get the knowledge to start doing these things, because the time is there. And I know it sounds a little harsh, but the reality of it is it's been done. Like two guys are saying, Colin is saying, like they work, I work. I got two like jobs, quote unquote. Like, I work for a health company and I coach high school ball, and I still make time to study the markets, read the charts, trade, and
my boy father.
I'm telling you, man, like nah, for real. So it's like, it's a balance for sure, but you have to sit down. Like I used to do, like I'll make a planner of my day. Like, all right, from this time, I'm gonna get up, I'm gonna work out, boom, come back, I'm gonna eat, boom, I'm gonna read a couple articles, turn on CNBC while I start my work day. Like, just plan out your day. Like, that can make a big difference. And you allocating 30 minutes to an hour just to learn a skill or read an article or do whatever. Like, and you do that consistently. That's the key, consistently, because then over time you start getting that knowledge base, and then you can start making moves.
No, definitely on that. And I'll be the harsh one. If you have an iPhone, listen closely. I want you to go to the top of your screen, top left corner. I want you to swipe down. I want you to scroll over, and I want you to go all the way to the bottom of your screen, right? And it's gonna say screen time.
Oh Lord.
How many hours have you spent on your phone? Don't tell me you don't have time. There's always that time. Make a sacrifice. If you really want to make money, if you really want this financial success, there has to be some type of sacrifice. And I can say that, I feel that I can say that because I've made that sacrifice, right? There have been times where I would much rather be, hanging out with friends, doing whatever, but at the same time, I have to understand the goals that I have set for myself, right? I have to understand again the point that we just touched on, my why. What am I doing this for? What do I want to get out of this? That's the time that I have to put into it, right? But a more tangible thing to answer that question, right? So in the stock market, and a lot of trading markets and on platforms, right? You can do your stop orders, right? So let's say,
AKA pending orders.
yeah, you can do your pending orders. And what this means is, let's say the three of us are reviewing a stock. Let's say we see Apple stock is dropping a little bit. We want to purchase this stock on the market opening, let's say the next morning, right? So in this hypothetical situation, we've reviewed this the night before, and now we go into our trading platform and we're going to set a pending order that allows us to buy Apple stock upon the markets open the next day without us ever having to touch the computer again, right? So this is the night before the market opens. We're setting this pending order. We've already done all of our studying. We've looked at their financials. We're doing this on the night before the market opens. We set our pending order. The next day when it opens up, it's done, right? So as long as you're allocating that time to be in the market, to go in and analyze it, go in, place those trades, there is that time because, hopefully if you're not, you don't have to be working right there. But those things can also be done from your phone with a lot of these platforms. So there is a way. Again, it's
You're on
all
that
about
phone all day anyhow.
Exactly. If you're on it all day anyways, why not use it to help you make money? A lot of times it's not the tools that are the distractions, it's what we're using them for, right? We have all the tools placed in front of us, but it's how we use them that is really dictating the outcomes and what's happening to us.
Right on. And I will say too, just to bring a full circle too, is make time for the Most High. Make time to read scripture and meditate on that, because that's the biggest thing too. So none of this stuff works. None of this stuff is going to get you to where you need to be. I ain't gonna say one. I'm gonna say get you where you need to be, because we all have our path, like we mentioned before. So making time for that, because that's the most important thing, and that's going to put you in the right mental state, the right spiritual state to start doing these things to better yourself, better your family. Because like I said, we hear it's temporary, so just making sure we keeping that perspective as well is huge.
Got to keep the first things first.
I agree 100%.
Yeah.
All
So
right.
with that, that was a good question. So yeah, let's wrap it up.
Yeah, for sure. So this is a quick little section. This one may have been a little bit longer than it typically may be, but we're gonna do a section that is called the refill, right? So all the refill is, we fill up your cup, right? You've taken it in, you've been drinking from the cup, writing your notes down, taking it all in. We want to refill it, right? My bottle's empty. I need a refill. Yeah, y'all know the song. Y'all know the old song. But yeah, so we're just gonna go back. The three of us, we're all gonna recap on a point that we really want you all to take home. Okay, and I'll go first. So one thing that I learned from today's podcast, from today's lesson, is to make sure that you are going over your spending and income reviews. Really make sure that you're hitting that down, getting in those Excel files, find somebody reach out to one of us. We may be able to help you get those things to an Excel sheet. Make sure you're reviewing those things. Know where your money is going. Know what money is coming in. It's really a simple way to gain a hold of your finances. Sam, you want to go next?
Yeah, I appreciate it. I agree, Cole. And the thing that I think I probably got from the podcast the most that stuck out to me was your why to investing. So why are you investing? I feel like the purpose for it always dictates where it's gonna end up. You know what I mean? Like the purpose of this water bottle was for me to drink it. You know what I'm saying? If I took it and threw it out the window, it didn't serve its purpose. So you knowing your why as to why you're investing, I think that's really the most important thing, and that'll help, as like you said, build your budget and help you make the right decisions along your journey. So yeah, that's what I think is most important. What about you, Roop?
Yeah, so those are definitely good ones that I kind of have written down too. But another one that kind of stuck with me was what you talked about, Sam, as far as like not having that fear. You see what fear creates? It creates destruction, disaster, loss. So knowing the market is a no fear zone, and if you are fearful, that can turn you into a gambler. It just, you don't want to have that. You want to have the right mental mind state when you get into investing, and even going through life, not going through life fearful, because it can turn you into something that you necessarily don't want to be, and cause you to make those decisions that might not be best. And you start making decisions off like survival and not what you need to be doing because you're fearful. So that really hit home for me.
100%, 100%. I agree. So, and y'all fellas got anything before we wrap this guy up? Because I know our listeners probably getting ready to, hit the hay and digest everything, and maybe get another refill tomorrow. You know what I mean? So,
Yeah, whatever that may be.
Yeah,
Hey, this was an exciting first episode. I'm so excited to see what happens in the future. All the gems, all the water, the tea, the wine, whatever they want to fill up their cup. I'm telling you, I'm excited just to be able to to give this out to everybody. So I'm glad to see where we go from this.
Yes, sir. So, you got any house cleaning items or anything, Colin?
Yeah. Make sure that y'all rate the podcast. Make sure you're leaving feedback. Leave us some comments. Topics that you want to hear us speak on. What special guests you all may want to hear that we're able to get on here, and also like and subscribe to our channel on YouTube.
Yes, sir. Make sure y'all do that. Good first episode, and yeah, what you say, Sam? Go ahead.
Get at it, man. Get on there, y'all. Get on the podcast. Get on Instagram. Like, I don't care if you got to create a fake account just to ask a question because you don't want us to know who you really are. Like, cool. That's cool. Like, we just want to get a dope,
For sure.
Yeah,
so, without any more elaboration, we'll close it out, and appreciate y'all tapping in. Y'all keep them cup full, and we'll see y'all on the next one.
Peace.
Yes, sir. Keep them cups full.